Hi, my name is RJ, and I am with a very credible mortgage broker who's been helping people for many years get everything that they've needed out of their mortgages, reverse mortgages, or helping them move along with doing the right thing that's for them when it comes to helping them finance their house. I have with me Dave Nute, and I want to ask Dave several questions so we can get anyone who's watching this more information and how they can also get in contact with Dave if they're interested about getting financial advice or getting a loan done by Dave. Dave, how are you today?
Doing great.
Fantastic. Dave, can you tell us a little bit about yourself, a little bit about your background history of exactly who you are?
Well, it goes back a ways, RJ. Started in '84, primarily helping people with retirement issues. Moving along to '93, I became a registered investment advisor and certified financial planner. And helping people plan for their retirement led me to the conclusion that many of us are not fully prepared for retirement. And we need to utilize all the assets that we have to pay the bills that come up over our retirement. So in 2005, I got involved with the reverse mortgage business. It's always been a big part of our overall business. Once again, we do a lot of other things in insurance and investments and financial planning. But more and more, I feel reverse mortgage is a key for many of us. We started that in 2005. I got our company license as a broker here about 2012 or 13. And once again, it's a big part of our business because I see the need for people to have more retirement income and more choices available. Whether it's just to pay the bills, prepare ahead for something important like long-term care, where's the money going to come from? And a lot of us are sitting on that money in our homes.
For some people who don't know what a reverse mortgage is, can you tell us what a reverse mortgage is?
A reverse mortgage is just a mortgage. The difference is you don't have to make payments if you don't want to. If you want to make payments, you can always make payments. A lot of people tell me, well, Dave, I don't want to get a reverse mortgage because if I don't make payments, my loan amount's going to grow. And I want to leave more for myself later on in life, or I want to leave something for my kids. You can always make payments if you want to. I want to emphasize that. But my point is you don't have to. If you can't, if something comes up, make a payment every other month. Make one payment a year. Don't make any payments. It's totally up to you.
How would you say this is a benefit to someone who's interested in, utilizing more of that equity that's in their home?
How can this be a benefit?
Yes.
Well, you can take a mortgage, you can use a reverse mortgage primarily in three different ways. Number one, you can use it to pay off your current mortgage and eliminate those mortgage payments that go on month after month, year after year. I mean, it's a real stretch for some of us to pay those mortgage payments because something else comes up. Let's look at what just happened across the country with this pandemic. A lot of new expenses, a lot of situations where there's less income. And having the flexibility to not have to make your mortgage payments is a huge benefit for many of us. There's other situations that just need long-term income. If you've got enough equity, we can turn that equity that's locked in your home into a guaranteed stream of income over a fixed period of years or over your lifetime, as long as you're in the home. And I emphasize for both lifetimes. If you're married or have another co-borrower on the loan, this is good for both lifetimes. Last but not least is a line of credit. And the line of credit is probably one of the most valuable tools for financial planning. And, as a financial planner, I've used that line of credit to help people increase their Social Security benefits, prepare ahead for long-term care. Just having that extra nest egg that's a tax-free benefit when you take it out. So often, many people in retirement have most of their money tied up in their IRAs and other retirement accounts. So if something comes up, you have to take out a withdrawal from those IRAs or retirement accounts. It's taxable income that complicates other things. With a reverse mortgage, it's liquid cash available to you within 5 business days, and it's tax-free income. So
Wow. Wow,
So
hold on. Let me just touch on this one point. A reverse mortgage is liquid income and it's available to anyone who gets involved or gets approved within 5 business days.
available within 5 business days. Just think how that could change your life. I mean, you go through, I mean, you might have 100, 2, 3, $400,000 there available in a line of credit. And that's available to you within 5 days, tax-free, anytime you need it.
Wow.
Okay. So
That's incredible.
it certainly changes the situation for many of the people I talk to. Another important feature is what a lot of people aren't aware of is that this line of credit grows each and every month with it based on the current interest rates. So that loan is currently growing at the rate of 4 or 5%. If interest rates go up higher, you might be 6, 7%. Growing for your future needs. Available within 5 days, tax-free.
When would you say someone would, be in the prime place to get a reverse mortgage?
When they've decided that they're in the home they want to be in for a while, number one, okay? There are closing costs we need to discuss and review. And obviously, the longer we're in the home, the longer we can spread out the impact of those closing costs, okay? So it's not a free lunch. I certainly don't want to imply that. But
No, not at all. But the benefits, I'm sure, outweigh what there's closing costs on almost every loan. The benefits usually seem to outweigh what the closing cost is, especially like you said, if you're sitting on several $100,000 worth of equity and you could use that money within 5 business days.
so if you're coming to me and say, Dave, I've got an invalid son who's going to have this house when I'm gone, reverse mortgage is not for you because eventually that loan's going to have to be paid back. If you're telling me, Dave, I'm going to be moving in the next year or two, I'm going to say, well, let's slow down a little bit. It's probably not the right loan for you. But even if you're younger, even if you're only 62, the youngest age to qualify for a reverse mortgage, it usually makes sense to get the reverse mortgage sooner rather than later. The next step is you have to have enough equity in your home, okay, to bring this together. We have to have enough equity to pay off your mortgages and the closing costs. And so we'll have to go through that and see what makes sense for your situation. But I emphasize the sooner, the better for the majority of situations.
I see. And going over that once again, what is the required minimum age, and do both spouses have to be that age?
Excellent question. It doesn't just have to be a spouse. You can have a co-borrower, maybe a brother or sister, or you both live in the same house. Or maybe a parent-child situation. Maybe the parents are older, 80s or 90s, and the child is over 62. I mean, you can both be on the reverse mortgage. So it really makes a lot of sense if you're the parent nearing the end of life and you've got a child who's 62 who wants to stay in that house. It's a wonderful way for you to guarantee a home for both of you the rest of your lives. Now, I'm sorry, I think I missed some of your question.
No, you're doing great. I just was wondering, what is the required minimum age? You said it's 62. And you also reiterated that it can be more than a spouse. It could be a brother, it could be a sister, it could be a parent-child. If the parents are a little bit older and the child is above the age of 62, there could be those type of people who are on the mortgage as long as they're living in the property.
That's great. Appreciate that.
Yeah.
Let's take this one step further, though. Let's say you've got one spouse who's 62 or over and one spouse who's younger. Would you proceed in that situation? And 9 times out of 10 or more, I would suggest no, okay? If it's an emergency situation, if foreclosure's in the wind or something like that, well, we do what we have to do. All of us are going to do what we have to do. But if you don't have an emergency situation, if your spouse is younger than 62, I would certainly encourage you to wait until both spouses are 62. That spouse would have to take their name off the title. The loan amount would be based on their lower age, and it really gets complicated. What happens if you die before your spouse? What happens if you die and your spouse's name is not on the title? Well, there's some limitations there. There's been some new rules that have come out here in the last couple of years, but once again, it doesn't make sense for the younger spouse it doesn't make sense for that couple to proceed with a reverse mortgage if the younger spouse is not 62.
What if they're close to 62? Would you still? This is why I would believe that someone would need to get in contact with you so they can go over their options. Wouldn't you agree, Dave?
Well, it's certainly a very important part of retirement. And I think one of the advantages that I offer that perhaps many do not is I deal with the whole spectrum of retirement. I mean, I put on seminars for Social Security, retirement accounts, long-term care. I put on seminars for estate planning, living trust, investments. I've done this now since 1984. Just one step leads to the other. What I like to do is look at the total picture. I see many situations where a person can not take their Social Security at 62, postpone it to get a higher benefit when they're 68 or 70, and take out a reverse mortgage to offset the difference of their younger ages. The question is, what's going to make your money last longer and give you a more secure retirement? That's just one of many.
How can someone who qualifies eliminate their mortgage payments, increase their tax-free income, or create a tax-free line of credit that will be available for their future needs?
Well, once again, the house has to qualify, and I'll deal with that a little bit later. But I mean, if you got a lot of major repairs and other things, the house might not qualify. Okay, most of the time it does. Certainly 90% of the time or more, the house will qualify. But I want to point that out. The second issue is that you have to have enough, is that you yourself have to qualify, and that's going to be based on your age and your credit and your available income. Okay, once again, these are all steps that are kind of hard to communicate in something like this, but it's something that we're best if we just get down one-on-one and see what's most important to you. And last but not least, you have to have enough equity in the home to bring it together. We have to have enough equity, and that's typically about 45, 47% at age 62, going up to 70% or so when you're in your 90s. And it changes every month throughout that period.
You can guide them through all of these questions that they have and any concerns that they have. That's correct, right?
I've been doing this since 2005, so I've been around the block and I understand what questions need to be asked. I mean, nothing is more frustrating for a borrower to start a loan with a broker who doesn't understand all these things, and then you find yourself going through the process and you didn't qualify. So let's see if you qualify first before we go to all that work for both of them.
Some people feel that some of these programs are fly-by-night programs, but the reverse mortgage program that you're talking about is not. It's a federally approved program. Isn't that correct?
The HECM reverse mortgage is the only approved federal program by HUD and insured by FHA.
Can you tell us what HECM stands for? That's HECM. Isn't that correct?
HECM, it stands for Home Equity Conversion Mortgage. It's a mortgage that allows you to convert the equity that's what I call debt equity sitting in your home so you can have other uses like paying off your mortgage, increase your income or line of credit. I mean, this loan has been around since it started in the Reagan administration, so it goes back 30 plus years. Everything is proved. Everything in the contract is guaranteed until the youngest borrower reaches the age of 150.
150? Wow.
Probably long enough for most of us. So if you get a reverse mortgage, you know the terms are guaranteed. The interest might be able to change if you have, depending on what type of loan that you have. And the other thing is it's insured by FHA. So if your bank goes out of business, all the benefits, your line of credit or income, all these things are guaranteed to you until you reach the age of 150. Okay. You're allowed to stay in your home for the rest of your life, you and your spouse. Okay. You have to make your property tax payments. You have to make your insurance payments, homeowner association due payments. I mean, these are things that you already have anyway. But you're guaranteed, you've got that roof over your head for the rest of your life. So there's a lot of important benefits. Many benefits are different. You know, the benefits are important to different situations, respectively.
What happens if someone has a mortgage that's less than 1 year old?
That's a good question. And this was a new rule that FHA came out with about 3 or 4 years ago. Okay. And what they're now requiring us to do, they're saying if this new loan from a reverse mortgage pays off another mortgage less than 1 year old, we can't proceed with the loan. Okay, they want to make sure that this loan has been seasoned. We want to make sure that you've been able to make your payments on that loan on a timely basis. Okay, but if you have a home equity loan or something like that that you've taken out within the last year, we can't proceed on that until after that year. I can take your application 1 day after that year has ended, not a day sooner.
Got you. Now, what happens if someone's had any late payments or to any creditor, they owe any property taxes or homeowner association dues in the past 2 years?
Well, there's a lot of rules on that, a lot of new rules that have come out in the last 4 or 5 years on that. What the purpose of these rules is to see if you have the ability to continue to honor your obligations while you're in the home. Those obligations continue to be paying your property taxes, your homeowner's insurance, your homeowner association dues. I mean, you've got to have enough ability to protect the value of the house. I mean, if the house has got a hole in the roof, you've got to be able to take care of that to protect the rest of the collateral. There are some rules that we have to go through, and if you have bad credit, there's different rules on that. There's different rules for late payments on property charges, taxes, insurance, etc. There's different rules for credit cards and other consumer debts. There's rules for income in relation to your expenses. Once again, it's too complicated to go in a short situation like this, but that's why someone like myself who's trained can help you get through this and figure out what makes sense for you or not. You know, the last thing I want to do is to take an application from anybody and tell them later they can't qualify. Now, let's find out if you qualify first.
What if someone has repairs on their house that they need to get done? At what point can they, get a loan, and at what point would they not be qualified for a loan?
Well, a lot of this gets down to the appraiser. I mean, all reverse mortgages require a FHA appraisal, and that's usually a little tougher than other types of loans. But if the appraiser feels something needs to be done, then that's a big part of it. Also, the underwriter who reviews everything is going to make a decision on what they see. You know, I've come across situations where gutters are hanging down, no longer nailed up, handrails are loose, holes in the porch, on the deck, that type of thing. I mean, the house has to be safe in order for it to be approved under this program. So if something like this where a problem is not safe, like the boards in the porch or the handrails, those are probably going to have to be fixed before the loan's approved. Things like the gutters hanging down, well, that's not so much a risky situation for any individuals. It just has to be repaired. And I had a case here last year, the floorboards, or it wasn't the floorboards, I needed to paint the house. The house had exposed wood. They had some gutter problems and a few other things. And we went ahead and approved the loan. The company gave them a full year to get these things in order. And they just set aside part of their loan amount before they released it to the applicant to get these things done. And the people could just submit the bills for these to the company and they'd take care of it directly. So ultimately, there's different rules for different situations, but the key is safety for people that are there, for yourself and for your people that are visiting you.
So basically, it's not a no if you need home repairs. It's you need an FHA appraisal just to find out, to make sure what it is, and then you can go over those options with them. That's correct, Dave, right?
That's correct.
All right.
And once again, even before we get for an appraisal, that's why you want an experienced mortgage broker We'll come out, we'll look at the situation. I mean, we've been around the block a few times, so we're going to have a pretty good idea of what to expect. And I'd rather prepare you to have these things done before you go out and spend $1,000 for an appraisal.
Now, what happens if someone is using their home other than like a typical home office? Like if they run some other type of business outside of their home, potentially like livestock or something that has to do for commercial uses. How does that work?
That can get complicated, and I really can't give you a quick answer on that. It's just a question we want to be aware of, because there's different zoning for each area. Okay, I mean, does that how if you're using your property for these types of activities, first of all, are they approved under the zoning rules? Okay, if you have a lot of cattle or other livestock and you're use that for commercial purposes, and it's a type of thing where a reverse mortgage may not be available. If you're growing crops, for example, it might not be available. If you're growing a garden for your own use, of course, that's not a problem. But these are things that it's hard to give a quick answer on. But there's things we need to explore before we incur the costs and go through the application process.
Which is another important reason why they should get in contact with you, so they're not either wasting money or they're not thinking that they're going to get denied right away, but to go through those options with you first. And then once they find out what those options are, then to proceed forward. What if they own a manufactured home, and do they need to own the lot? Do they not need to own the lot? And is there any issue if the home was manufactured before 1989 or after 1989?
That's an excellent question, because a lot of homes in my area where I live, I'm out here in Sequim, Washington, and it's a rural area for the most part. A lot of people buy manufactured homes. There's a lot of manufactured home communities here in town. To answer your question, first of all, you have to have rented. You cannot have your home on rented land. You have to own the property underneath the house, okay? The second part of the question is, what age does a manufactured home have to be? Technically, under the HUD rules, they used to go back to, I think, about 1976 on that. However, most of the major lenders that are out there for the last few years have been requiring a minimum age after 1989. So if your home was built in 1990 or later, we shouldn't have a problem. Another problem with manufactured homes, we have to make sure that it's affixed to the property. Okay, for example, the very first case I had, I think this was back in 2005. A couple had a manufactured home. It was young enough to qualify, but they just had it sitting out there on their lot on cinder blocks. Nothing was tied down. Can't imagine how they would fare in a heavy wind. So in this case here, everything has to be fixed to the ground. There are certain rules for that too. But
That's fantastic.
But we get many manufactured homes approved. So once again, let's sit down and talk about it, and we'll take it from there. See what makes sense.
Where do you specialize in reverse mortgages? Is it limited to an area, a state, or do you do all 50 states?
I'm only licensed in the state of Washington. Once again, the reverse mortgage is part of my job. I've got other things to keep me occupied. So I just don't have the time really to go outside of the state of Washington. But within the state of Washington, we primarily work our 4-county area around me: Clallam, Jefferson, Island, and Kitsap County. But it's not unusual for me to travel. If I've got somebody that needs some help, I'm happy to travel anywhere in Western Washington. Or frankly, we can often do a lot of this over the phone. I know with the pandemic and everything, we're all concerned about personal contact. And frankly, we can do this over the phone. It might not be the ideal situation, but that's kind of the life we're living today. But you tell me what you want to do. If you want me to drive to your home a couple hundred miles from here, that's not a problem. I'm happy to sit down and go through that if this makes sense for your situation.
Wow, that's a lot of great information that you gave. And I know there's a lot more information that people may have, or some questions that they'd have that might be on their mind. Dave, what is the best contact number to reach you at?
My toll-free line is 1-800-562-9514.
Can you do me a favor and repeat that one more time?
1-800-562-9514.
And what if someone wants to get in contact with you via email? What's the best email that they can get in contact with you?
DNUTECFP@OLYP as in Paul, EN as in Nancy.com.
Okay.
Once DNUTECFP@olipin.com.
Is there any other, or is there a third way to contact you, or are those the two best ways?
Those are probably the best ways.
Okay.
We also have our websites.
Great. What's your website?
Well, there's a lot of advantages to that website. Number one, there's a lot of great information, a lot of questions and answers, just like what we've been through. There's a calculator to help you get an idea of what amount would be available. There's a way to get my free book. I've written a book on reverse mortgages called The Truth About Reverse Mortgages. It's got some excellent information in it and tells you a little bit more about my background, et cetera, if you want to know. So our website is www.northwest, the full word, NORTHWEST, Northwest reversemortgage.com. Okay. And there's ways you can contact with me through that.
Got you. So that was www.northwestreversemortgage.com.
Exactly.
Is that plural or singular?
Singular on mortgage.
Got you. So www.northwestreversemortgage.com. And there you can find, once again, Dave's book on the truth about reverse mortgages and a lot of great questions that we maybe have not covered here that you can find on his website. But the best thing I think you should do is get in contact with Dave. And one of the easiest and fastest ways that anybody can do is just pick up the phone. And what's that phone number one more time, Dave?
1-800-562-9514.
Well, we've had Dave. Now, do you have anything else that you'd like to add to tell the viewers? Anything on the top of your mind before we leave this interview?
There's no cost for the book. I'll ship it out on my dime there. I also give a $1,000 credit out of my pocket to the closing cost. It's limited to your closing costs for any reverse mortgage you get through us. I believe in education. I want my clients to understand what they're going to do. And I find the best way for me to do this is to share the information in that book. And frankly, you know, unlike some situations, I'm not afraid of you learning more about this subject. The more you learn about the reverse mortgage, the more you're going to find it can make sense for your situation. So I'm happy to pass that $1,000 bonus along to help you reduce your closing costs, just because I think it's important.
If you're listening and you're interested about reverse mortgages, I suggest you go to www.northwestreversemortgage.com. Get some more information. Also, don't be afraid to be able to get the free book that Dave has written that explains everything about the reverse mortgage, giving you more information out there, and his special of $1,000 off of any of the closing costs and limited to the closing costs, $1,000 off of your next reverse mortgage with Dave. I think that's very powerful, and I think that's very generous of you.
Thank you, RJ. Appreciate it very much.
Well, there's a couple options that Dave has for you. If you're interested and you're in the Washington area and you are above the age of 62, you have a house with equity, and you're looking for a way to not pay or eliminate your mortgage payments, get a tax-free loan, and be able to stay in your house, Dave is the person, the professional for you. And once again, if you are in that area or any of those 4 counties or, you know, in the state, like he said, he can do multiple things. 1, he can take the application or talk to you over the phone. 2, he can drive to you, even if it's a couple hundred miles, so you absolutely know that this man is service oriented. And 3, with the COVID going on, the pandemic, there might be an option for you to do exactly what we're doing right now, which is a live video chat, which he can set up with you also. So there's multiple ways that you can get in contact with Dave, and there's multiple ways that he can help you. So Dave, I'd like to thank you once again for such a wonderful interview, and I'm hoping you have a fantastic and wonderful day.
I intend to. You do the same.
Okay.
Thank you.
Talk to you soon, Dave.
Take care.